Hey everyone, welcome back to another portfolio review. I'll start off by saying that this is take number 2, or attempt number 2 rather, as I think I recorded through like 10 minutes, and then I realized that my mic wasn't even working properly or whatever. I had to restart my computer and it just didn't hook up, so I spent 10 minutes talking to nothing, so the recording was trashed. As it sits right now, I have to get my video player updated before I can, I guess, play the video and whatnot, but anyway, I just also want to take this moment to kind of point out a couple things. If you like these videos, leave a like. I really do appreciate it. It helps out my channel quite a bit to get some more exposure. And if there's anything that, if you make it to a certain point and you have a comment, question, whatever, feel free to drop that in the comments. I love reading them, and I reply to all of them because I don't get very many to begin with. So there's that. And also, if you enjoy the content that I produce, consider subscribing. That, again, helps out my channel quite a bit to be exposed to more people. And I post these videos fairly regularly. I'd say like once every 2 weeks, sometimes more often depending on what happens. And I post other gaming related videos as well. But yeah, so I'm just trying to remember everything I talked about last time and whatnot. So I'll probably make another update in probably about a couple weeks around the 7th when I get the July update going out. But I know the last time I was recording this, I talked about how I finished up my first goal of this year. If you haven't watched the last couple episodes, I've been really pushing to pay off my debt. So that was kind of one of 2 goals that I had for this year, was paying off my debt and also getting $10,000 in investments between my 2 brokerages. Oops, didn't log in quite yet. So I have $4,500 on this one. And then this one I also have $4,500, give or take a couple dollars depending on where they settle. And most of both portfolios are kind of built around dividend growth investing, is the main idea. And if we kind of take a look at the history, now that I have internet, I was having problems with it going down. But you can see my next couple dividend payments will be from New Residential Investment, JP Morgan, and then S&P 500. And then starting in August, I'll have AT&T paying me. So that's pretty exciting to see. And if we just head back in the last week and month more so, it hasn't really done a whole lot. It's kind of, the low end has been around 4,400 and then the high end has been 4,500. Not really anything too crazy. It's just kind of stagnated because I haven't really been investing. I've been putting my money elsewhere, and we'll kind of talk about that in a bit. Same thing on the M1 finance side. Basically, once I stopped adding money, it's just kind of stagnated over the last month, kind of fluctuating between 4,450, 4,500. Not nothing too much to really brag about. This is just kind of an update on where I'm at and kind of what my goals are going forward. In the last 2 weeks since I recorded last, I got a couple dividend payments from some REIT companies. So Main Street Capital, Store Capital, and then O'Realty has paid, which is cool. I don't know what's up with the 3 payments from Main Street, but neat. And then also my bonds have also paid out. Also, I had my first ever automatic purchase of companies. It passed the $25 threshold, so it bought some more Southern Company, AT&T, Dominion Energy, and Duke Energy, and then Wells Fargo and Lockheed was excluded from that because they kind of switched how they do it now. It needs to be over $1 for it to buy. And then Medtronic, Cisco, Comcast, and Simon Properties have all paid since then, which is really cool. Bring me up to 341 in just a cash balance available. And just something to point out is I still have kept bonds. I haven't sold out of them to repurchase in other companies. Yes, I am in the understanding that I can get better returns with real estate or places that are hurting right now. However, I'm still 25. I have the long game to go, and this just kind of balances out the hurt right now in my portfolio. Where I may have been down $50, it could be a whole lot more if I put more into these companies and just, wrote it out. So I'm not too concerned right now about getting the highest returns and being risky. If I had more disposable income, I would definitely make a portion of my portfolio to do so. But as it sits right now, I'm really happy with where I'm at between both portfolios, honestly. With the good amount of risk, but also a good amount of safety. Because again, all investing is your own personal risk tolerance, and mine isn't very much because I don't like gambling, so I don't like to risk my money if at all possible. And for the most part, I'm only down $8 in this portfolio, considering the money that I've put in, and this I'm up $80 compared to the money I've put in. So overall, I've broke even essentially, but that's all right. This spreadsheet is the one that I've made to keep track of my dividend stocks or just stocks in general, and my Robinhood portfolio. So this just keeps track of the company, what I've bought it for, the average price I bought it for, its current price that it's trading at, the high and the low, just so I can kind of see if maybe it's a good time to buy or a time to wait, how many shares I have, how much money I have into the company, its market value, and then from that I have the gain and loss on the companies. So if I'm ever looking to buy, I'll be like, oh, Energy Transfer, they're down $4, and kind of look at that. But you can see that Wells Fargo I'm the lowest in, but I've also bought Royal Caribbean when it was at the lowest points, so I've made a lot of money from that. With that, I have a couple pie charts that I quickly reference. This one is just the sectors that I keep track of. This allows me to quickly see which sectors I might want to add more in. Maybe going forward, I want to add more into utilities or communications, and maybe less on consumer cyclicals, which I bought quite a bit of when they were really low. Stock number percentage, I kind of want to average it out where, some of these companies I have a little more percentage-wise, and maybe tone Wells Fargo maybe down to 10% or something. And then the same thing with the money. I've spent about 17% on Wells Fargo, almost 10% on JP Morgan. So you can kind of see how I've spent my money on certain companies, because shares are one thing, but, the money spent is a whole other ball game, because if we look at Energy Transfer, I have, nearly 10% stock proportion wise. But if we then look at money spent wise, it's only under 4%. So you can kind of see how both those can play a factor. The next tab that I have keeps track of my dividends. This up here is just the spreadsheet that I kind of plug it into to then get graphed. And every dividend company is kind of paid on a quarterly basis in a sense. So some companies pay January, February, and March, going through each quarter. But for the most part, on the last month in the quarter, they pay out more. So you'll see that trend where it's smaller, big chunk, goes down, smaller, big. But as you can see, it's been growing over time in that same trend. So it's really exciting to see. And then they also have the yearly totals at the end as well, which I'm really excited to kind of see how that grows over time. The last spot that I've made is a projection for the year. As we go along farther in the year, it's going to get more and more inaccurate as to how much I will get paid out. Assuming, if I buy extra shares of a company and they've already paid out, or JP Morgan as an example, I bought halfway through the year, so I may not see the full 14, but I might see $7 of it. So that's kind of where I can compare what I've officially been paid to what I was projected to. So it's just something that I kind of track along, that I've put together, and I'm really proud of it. And it specifically tracks my Robinhood only. Because of the way that I'm doing the investing on the Robinhood of buying full shares, that's how I'm able to track this. Where M1, if we take a look at my holdings, I hold 2.69 shares of LQD, and like 8 shares of AT&T. So it's just a little different. It's or 8.07 shares. So it's a little harder to track exactly in this same format, which is why I've copied the same spreadsheet that's used in the Joseph Carlson show, because my portfolio is very mirrored to what he did. He has changed a lot more since I've initially started it than I have done, but I'm okay with what he's done because he has a pretty good understanding of what he wants to get done. So pretty much all it tracks is how much I've been paid in dividends, what the portfolio value ends at, and formulas to figure out what its month-over-month growth was. And then in this darker section, it specifically tracks the average monthly income, the actual income, and then the annualized income. So in the similar boat of this is what I should get paid for the year, that's what this part is telling me. So over the year, I should get $117 for the year. So we'll see what actually it turns out to be. But as we take a look at these charts, this is that average income. So the blue is where I should be. The black is where I actually was. And since I had such a really good month, it drew up all the averages. So now everything dropped below. But it was a good month that we had. So you can see the 1, 2, 3, 1, 2, 3, 1, 2, 3. So the same sort of pattern follows even in M1 Finance. This chart shows where my average income should be month to month. So by April of next year, I should be, I can't actually see where it's at. We'll say around like 250-ish should be my income around next year, which that was about right. So 260 should be what I'm at. And this is then tracking the portfolio value. And again, you can see that I've stagnated because I haven't really put any money in. Because a lot of my money, instead of going towards investing, was going towards paying off my debt. So now this kind of brings me back to, in the last video I said, all right, I can start investing starting soon. So I'm really excited to talk about my next purchases. Well, after I posted that video, I realized I have other stuff that I need to worry about first. So let's kind of take a look. So now that I have both my debts paid off, I want to start building up, not my checking, my savings. I want to get that to 3 to 6 months of an emergency fund first. Liquid, instant access that I can get at a moment's notice to pay off or pay for an emergency, or if I lost my job or whatever the case is. Right now, if I needed something, probably bonds might be the first thing I sell. Something that I've made money on, but also is it's not really going to grow very much, and I can go back and buy it later. Because as it sits right now, they're all in the green, and they're probably yielding quite low right now. Dividend yield 1.63 expense ratio. So I mean, it's very low right now. Where before, I'm sure when I bought them, they were a lot higher. I mean, it just varies. But as it sits right now, these are something that I consider more liquid, and pulling it out for the cash would be a little bit better. But as it sits right now, I have $600 in my emergency fund that I'm going to continue to build up. With that, I've also applied an apartment, so my investing liquid funds will be a lot lower, so I won't be able to invest heavily as much. So right now the goal is to kind of maybe hit around $3,000 in my savings. Honestly, even $2,000 would make me a lot more comfortable, as I've been very uncomfortable in the sub $1,000 point. But now that I have this debt paid off, that definitely frees up $300 in money each month. So that does help. So right now we'll just kind of ride it as we have for the 2 portfolios in the retirement account. And yeah, right now I'm, more accurate to what my net worth is. So we're actually really close to the point where we're at $30,000 in a net worth. And that is purely on like my car, my watch, and then all my portfolios as well. So we'll probably hit that next month. If not, probably next month, because I am not at that point. But, with my Mustang, we were at $37,000 in, assets, but I sold the vehicle to pay off a debt. So we've kind of actualized it a little more. But the last time we were at 29,000, we were actually at 14,000 subtracting the debt. So we've just gone up and up. So that's really good. So that's kind of where we're at right now, and kind of the goals moving forward. And in case you haven't seen this was the debt snowball that I was tracking, with where my balances started at, how much I paid off, the interest, and just kind of track that way. But as we say right now, this isn't going to update very much. I'll probably just keep track of what dividends I'm paid, kind of keep track of if this is continuing to grow. But right now, kind of the main focus is having this column grow and hopefully get to that $2,000 to $3,000 point. Because this was a lot more comfortable of a time that if something came up, I had the money to take care of it. But overall, it wasn't very successful because I had this much in debt, which, yes, I have $2,000 in savings, but I also have negative $17,000 to my name in stuff I have to pay off. Where right now, I may only have $600 plus, what's in my checking, but I don't owe any money. So this is a way different spot in life to be in, where, before it's like, oh, I have $2,000, but in reality, I don't. I'm just kind of rambling at this point, but that's kind of where I'm sitting right now. I mean, between both of my accounts, I'm sitting at 1382. So that's, definitely a lot better. Considering, if we look at December of last year, I was sitting at $700 total, but I was negative $15,000 to people. So definitely a lot better. So it just shows you that in 6 months, you can completely pull a 180 on your finances. Ending December, I was poor, realistically. Christmas drained me quite a bit. I didn't have very much in investments, still kind of learning. But I owed the bank $15,000, where, now I'm in a lot better of a position. So I'm really excited. Hopefully next video, I can do some updates for July for Robinhood and M1 Finance. Hopefully I can get some more money tucked away into my savings to get that emergency cushion built up. We have 5 months left. Did I count that right? 1, 2, 3. Yeah, we'll just say 5 because I don't want to mess up again. 5 months to get $1,000, so that'll be a lot easier to do. It might be one of those things where I put like $200 in savings and $100 in investments in each portfolio or something, just something small. Because $200 over the 5 months, that's $1,000. I hit my goal. So something as simple as that. But we'll see. We'll see what it actually comes down to once I move out onto my own, and hopefully next video I'll be able to talk about that, because I did ask to move in August 1st, but I haven't heard anything yet. I applied back on the 8th, so it's been 2 weeks without hearing anything. Another story for another day. But they also said that they had openings the 31st, so we'll see if I move in August, or if it's something that's September, I have to wait to do so. But I mean, as it sits, I might have to edit this chart and make it a little bit longer. But as it sits right now, I'm really excited for the future. I say that every video, but it's the truth. I am excited to continue to grow my net worth, continue to grow my portfolios. Being more financially focused. Everyone hates talking about money. I've learned that. I've talked to a lot of people, and they're just so sick of hearing about it. But the fact that they don't talk about it is what's wrong with this society right now. We're so afraid to talk about money that if we did talk about this in school and we made it more acceptable, like as acceptable as what your favorite food is, we probably wouldn't have people that think that $17,000 backwards is okay. That, oh, I have $2,000 in my savings, or like a scenario like this where I have $400 in checking, or even this scenario where I had $2,000 in my savings, $1,000 in my checking. But this may have been right before I paid off something. But I could have used this money and paid down like half of my loan, my watch loan, and been done with it, or a lot faster. I just sitting uncomfortable for too long. But I'm glad it was around August that my eyes were open to what I could do. So I just kind of spent the last couple minutes rambling, and hopefully you enjoyed that. Hopefully you enjoy kind of listening to my thought process, because that's a lot of what this video series is about. Is just less so about, look at how much money I have, wow, I'm so amazing, is more so like, this is my mindset when it comes to money and investing. That I may not have the best, mindset with money, or I may not be the best with money, but, I'm a real person at the end of the day, and I make mistakes. And, if we go back like a couple months, I had companies like LYG, I'm trying to think of what else I sold, Mazda. I like companies that are okay on paper, but in reality, they just don't do anything for me. So I sold them off to buy better companies. I put more money into, I think, AT&T. I sold them and I put them all in AT&T. Overall, a way better company. So I'm learning as we go along. My voice is starting to dry out, so I'll probably wrap this up soon. But Basically, the long story short is it's a process. I will be really excited to look back in January and even December to see where I started and kind of see my progress. So it's kind of a documentary series for me as well to kind of see how I've grown. But anyway, thank you so much. If you've made it to this point in the video, you guys are awesome. Leave a like, leave a comment about anything from this video. I'll probably change up this spreadsheet one more time, but we'll see. Anyway, guys, thank you so much. Have a good weekend, or hopefully you had a good weekend, because this will probably be posted on Monday. See you guys then. Talk to you later.